After owning a home, what's the next piece of the American dream? Well, how about amassing money, retiring comfortably, and also saving for college? If you think a 401k will do that, it's not going to go very far. Neither will Social Security. There is a way you can build financial security. It's called being your own bank. It's called banking on yourself. It's called infinite banking. You've heard all these concepts, right? I'm well familiar with them. I deal with them. I know people who do them. One of them is here, Chuck Wynn with QMS Financial. And we're going to talk about how they do business and how they can help you with this concept. Now, I believe the concept is solid. And I want to know how you guys execute it. You help people establish really a monetary system. Is that what it is?
It is actually creating a completely different financial system for life. It changes the way they pay their bills, changes the way they finance the things that they need and want in life, and it's a completely different way of looking at it from the way that we traditionally look at it.
Okay, is it savings?
Yes.
Is it insurance?
Yes.
Is it a bank to borrow from?
Yes.
Okay, so how can it be all those things? You need to help us out here.
Sure.
First of all, let's look at this first pie chart because we got a lot to go through, and I think you want to educate us. So let's just look at this in general.
Sure.
What are we looking at here?
Basically what we're looking at is a traditional model of the way people spend money. Typically we're told to take 5 to 10% of our money, set it aside for retirement, and hope that that money
But here's what we do,
becomes,
really. We save 5%. 35% goes to finance.
Right.
That's just out the window.
Yes.
Okay. And how can this system help that?
The way this system helps that is instead of focusing on the 5 to 10%, we show people how they're losing that 35% in the form of interest rates and fees.
Can you let that come back to you?
Absolutely.
How do you do that?
The way we do that is we create a pool of wealth using that money and then allow people to borrow from that pool and then pay themselves back instead of paying those interest rates and fees off to the bank.
So you can pay interest to yourselves.
Absolutely.
And then it grows tax-deferred, this fund.
It is in a tax-favored environment with the current IRS code, yes.
Okay, now, let's go to the second graphic. When you talk about liquidity and use and control of your money, let's compare it because you now compare it to qualified plans and all of that. Okay, qualified plans lock away your money and impose a penalty. What do you mean it imposes a penalty? You mean if you take it out early?
That's right. If you put money into a 401k, an IRA, a SEP, even a 529 plan, and you put the money in there and then you need it for some reason down the road, you have to go out and either pay a 10% penalty on that money in order to be able to access it. But in general, what happens is we have a financing need created because our money's locked away and we don't want to pay that penalty.
So you're telling me that you're going to establish, and being your own bank establishes both a retirement plan plus money you can use along the way.
It's a complete paradigm shift from the way that we're taught to put it away and not touch it. We coach people and show them how to use it along the way.
So you have this growing, but you can still use it.
That's correct.
Okay.
Yes.
Now, we have experts that will be standing by for the rest of the hour. I'm just going to give you that information now, plus at the end, because I don't want them just standing there. Because if you have any questions, any skepticism whatsoever, please give them a call at 303-771-HELP. 303-771-4357. Now, they'll like to take your name for a seminar. These seminars are free with no obligation to learn more. And as I say, when you go to a seminar, you should learn absolutely everything you need to know about a concept. It should not be a pig in a poke. These guys will tell you everything you need to know to make this a reality. But give them a call if you have any questions. Then we'll come back to this right now. We'll talk. 303-771-HELP. Okay, let's talk, Chuck, about some other things. At age 16, let's talk about what happens here. If you explain how you set this up for your daughter.
Yes. I set this fund up for my daughter. Instead of putting money into a traditional 529 plan, I put it into this fund. And as this fund grows...
A 529 plan would be a college plan.
That would be a college plan.
And you're going to help pay for your colleges, your daughter's college.
Yes.
And explain now her account and specifically the car and all that.
As I set up this account, the money grows very similarly to the way it would grow in a 529 plan. However, I've got liquidity, use, and control of my money now. So when she's 16 and needs her first vehicle...
How old is she now?
She is 3. She'll be 3 in 2 weeks.
Okay, well, cool. I didn't realize that. So now when she turns 16, what will happen?
When she turns 16, I have control of the money and I make the decisions on how that money's used. Now, I can use it before 16. But
and about how much will be in there?
$48,000.
And you can borrow that.
And you can borrow that. That's correct.
Now that's considering what kind of return to get the 48. Is that?
There's an internal rate of return about 4%.
So you're not exaggerating a return here.
No.
This is a very conservative
Very
estimate.
conservative.
And this is tax deferred as well.
That's correct.
So in order to earn that on the outside, you'd have to make 7 or 8%, right?
That's correct.
Okay.
These are after-tax dollars.
Okay. Okay. Right. That's right. So now, but the growth is tax deferred.
That's correct.
Okay. So now, she's at 22. What would happen?
When she's 22, she now has roughly $59,000 to $83,000. The cost basis is $59,000. We've got about $83,000 in there now. But the difference is she's not going to necessarily wait to go to college until she's 22. But this gives her a way to pay loans on the back end. And the way that this is completely different than a 529 plan is $529 count against you for financial aid.
Right, they do. And this doesn't.
This doesn't. This is invisible.
We should mention you're not including in this return here any interest she would have paid to herself.
That's correct.
Because if you buy a car and pay yourself back, you're actually allowed to put more money in, tax deferred, by interest. So you're putting interest into this plan. So that doesn't include, which could be very, even more than that actually.
That's why we try to keep it very conservative.
Okay. Now, so now now you're looking at older, 40 years old. She can buy a house, or even before that, she can borrow to buy a house.
Absolutely.
Retirement. And in retirement, you can borrow against it, never really cash it out, and take tax-free payments.
As long as you keep your contract in force, yes.
Right. And then the contract, being an insurance contract, will pay off any debt upon death.
That's correct.
All right. So what then do you do?
What we do is we introduce people to the concept. We give them an education, and that's what the seminars are for.
Okay.
So that people can understand what it is we're talking about.
All right. Then what?
Once they come in, if it's something that they see is of value to them, we let them set an appointment to interview us.
Okay.
And we have them fill out a financial questionnaire.
Okay.
At that point, we take them into a complimentary cash flow session. And we also work with cash flow coaches, and we set up our clients with a cash flow coach because this is a change in the way
So you teach them how to divert the money to this plan?
We teach them how to do it, and we engage them in the process. This isn't a system that we just set on the shelf and say, we'll come back to you in a year and see how it worked out for you. Because oftentimes what happens is problems arise through a year. People have major expenses they didn't anticipate, and that throws the whole plan off. Well, if you're waiting to see your financial advisor for another 9 months, that can cause problems.
What if you start this plan? What if you set up this plan and you can't make the payments all the time? Does it die? Does it go away?
It could. And that's one thing that we're very careful with in the very beginning is making sure that people are sustainable in this. And that's one reason we really hook them up with cash flow coaches so that they understand their debt. Because what we're teaching is way more than just the infinite banking piece. It's also helping people understand how their money works for them and works against them and how it can be integrated into our concept.
And you have no long-term contract or obligation for these people?
No.
They come, if they like it, they keep going. If they don't, they can drop out.
That's correct, absolutely.
Now, let's talk about, by the way, the seminars coming up.
Sure.
You have 3 of them.
We do.
Okay. When are they going to be? Like August 11th, 8th, and the 18th?
We have one tonight in Longmont. We
Okay.
have one on the 18th, which is a lunch and learn. We provide lunch for that one. And we also have one on the 19th, which is an evening one at 6 p.m.
Okay, you see the times and dates there. It's very important for the one tonight you give a call. QMS Financial has 3 upcoming seminars to learn more about being your own bank. They're free. And please, there are limited seats. So, and please, if you do call, show up because they are going to hold a seat for you. QMS Financial. You'll learn everything you need to know to go on. If you have any questions, they will answer them. You can call when they're not here. And by the way, for the rest of the hour, I'll give that number in a second. But while they're in their offices, any other time, 720-887-4000, 720-887-4000. And, of course, you can call Chuck with extension 1 or Robin extension 2. And online, QMSFinancial.com. And you're also on Facebook.
Yes, we are.
And LinkedIn. Facebook would probably be for more of my viewers right now. And 720-887-4000 is the number. But people are standing by now to take your seating reservation for tonight. But they'll also answer questions, right?
They'll also answer questions as well.
Because if we have some questions that are pretty interesting, I might have you come back to answer those. So,
I'd love to.
So guys,
Absolutely.
303-MARTINO if you want to ask questions on the air, or 303-771-HELP for help, or to get seating for that seminar tonight and for the future ones, 303-771-4357. Okay,